Hey everyone, welcome back to Inkmattic, the personal finance channel here on YouTube. If you haven't already seen our blog, head over to inkmattic.com after this video, where you get new articles on a regular basis, and they are to do with personal finance, how to improve your finances, investing strategies, and so on. A little spoiler, you've just tuned into episode 66 of the Trading 212 Portfolio Update, and have I lost the plot? What have I done? Stay tuned, let's roll the intro. So what I want to share with you guys right now is the amount that I've actually deposited into my ISA. I haven't shared this figure since this series was in its teens. We're at episode 66 right now, and I think it's about time that I show you exactly how much has been deposited into this ISA. So I've deposited a total of £10,376.15. Withdrawals at the moment is 0, and I'm actually super thrilled with that being 0, because it's shown that I have stuck to my goals and I have not taken a single penny out of this account. So I've kind of gone with the mentality that whatever I put in is staying in this account, which is great. So obviously throughout this video, remember that this is not financial advice. This is just my personal opinion. Obviously do your own research, your due diligence, and make your own decisions, and let this influence you in no way whatsoever. Also, don't forget to follow us on Twitter, Instagram, and subscribe to this channel. We're at 789 subscribers. I really do want to get this to 1,000. If you could hit the subscribe button, that would be much appreciated. And also, don't forget to like this video and leave a comment down below on your thoughts of this video. And don't forget to check out last week's video, which is on the card above. And yeah, let's get started with the portfolio overview. Alright, so just a little disclaimer here that I have sold a number of stocks, and this is why these numbers are a lot lower than the previous update. So as you can see at the top, the total value in the account, which is both in assets and in cash, which is I've got £1,983 in cash in this account. So total value at the moment is £10,225.82 invested. Total amount invested, this is excluding the returns of the amount that's, amount invested is £8,645.22. As you can see, there is a massive drop over here, and this is because I've sold a load of stocks. Returns at the moment is £1,580.60 for the amount that's currently invested. That's 18.28%. And the reason why this one has gone up, because I have sold a number of my poor performing stocks, and we'll get into that later in this video, but I just want to be clear that I've sold those poor performing stocks at a loss, and which has driven this number to go up, essentially, because those stocks are no longer invested, and this is only for the amount that has been invested. If that makes any kind of sense, I hope you guys understand that. So let's talk about a stock that I've purchased this week. There's only really been one, and this big shout out to Rob Knight again. He commented on my last video about this one, and I am a huge Dividend fan, and I love a good dividend. So this is one that everyone really knows about, and it's Tesco. So with Tesco, they are paying, I think it's a 50.93p dividend. It's a special dividend which is going ex on the 15th, I believe. It's a huge dividend. I think it's worth like a fifth of the actual share price, which is insane. And this is pretty much down to the sale of their Thailand Asia business. Awesome. Really, really excited for this dividend. But also, the other reason why I invest in it is because I do think it does have it is a long-term safe kind of company. During the pandemic, they have absolutely thrived because everyone's been stocking up on food, especially with last year with that toilet roll situation. Shelves are being empty, etc. When people food panic buy, it only really benefits the supermarkets themselves. But in the long run, I do think this is going to be a good company to invest in, because, supermarkets, they're not going anywhere. Obviously competition is definitely increasing. I've personally not stepped into a Tesco for a very, very long time. However, members of my family have, and I've done some online shopping as well. So, it's pretty much your go-to to do your groceries. And in that sense, they are doing pretty well. In terms of Simply Wall Street does suggest that they are 41% undervalued. It could be a buy, it could be not. But for me, I am definitely buying a load of these and taking advantage of this special dividend. So thanks again, Rob Knight, for that. Also, it's worth bearing in mind that they are also going to do a share consolidation. So every 19 shares that you have, they will become 15 shares. So for every 19 shares, they'll be replaced by 15 new shares. So if there are any fractions that are, that you are ending up with, so for example, let's say you have one share of Tesco, that will be essentially changed to a new one, and obviously it's a fraction, so that'll be sold off and donated to charity. So if you want to avoid that, make sure you hold a multiple of 19 shares, so you'll get the full amount and take advantage of that. So with that being said, I am actually going all out on this. Like I said, I do have about £1,900 in spare cash, which I'll be buying into Tesco next week on Monday. So that is that. At the moment, I've got 700 shares. It's currently valued at £1,724 and 3p. Returns at the moment is £15 and 63p. That's 0.91% in the green. Average price at the moment is £2 and 44p. So, I am looking to buy some more in this. Like I said, hopefully I can get a huge dividend payment out of this, which will be amazing. But let's see how that goes. I'd love to know what you guys think about this. Are you going to be buying into Tesco? So yeah, I would love to know how many shares are you thinking about buying? What are your long-term outlooks for Tesco? I know for me personally that I'm going to take advantage of the dividend, and I'll probably reduce the position at least by half of whatever I have at the time of ex-dividend. And this is just because I want to rebuy some of the stocks that I've sold. So let's dive into some of the stocks that I've sold this week. And this is one that I am not going to be rebuying into. I'm actually really happy to get rid of. And this is New River REIT. So I actually made quite a bit of a loss on this. When I sold it, I was at a 30% loss. I had 450 shares, and I think my average price was about £1.11. I realized that if I sell this and put the money that I've got from this into Tesco, assuming that after the ex-dividend and the consolidation it's around the same price, that I will only be down 10%. So I was like, yeah, I can stomach 10% loss, but 30% was just too much to stomach. Obviously, I should have really sold this at the beginning of the pandemic, because it's literally just been sitting here for a year and not doing anything. And that's something that I've learned, is that if you don't believe in a stock anymore, you should just get rid of it and reinvest it into something that is doing much better. Because at the time, like if I took the amount that I was down by, I think it was about 50%, and if you look at stocks from since the March drops last year to now, they have exceeded a lot more than 50%, especially in terms of the US stocks. So that is something that I've learned, is just cut your losses if you're not happy with the stock, and if it's not going anywhere, and just buy into something else. But me being me, I held out for a year, and all the other stocks have had huge gains, whereas this one hasn't really done anything. So yeah, I've pretty much closed my position in this, and I am actually really happy to get rid of it. I did sell 450 shares, and I'm expecting to be a 10% loss on this after the Tesco dividend, but we'll see, and hopefully reduce my losses in the future. The next stock that I sold, which was RDSB, which is Shell. RDSB, I think it's this one. Yeah, so this one I sold 13 shares of and just closed the position completely. There wasn't really any sort of reason why. I wanted to put more money into Tesco, and at the same time I do want to reduce my positions that I have, the amount of positions that I have overall, and just focus on fewer but larger positions. So I've been doing this for the whole year, and it's a slow progress, and it's more towards me finding a reason to sell these, and this was a reason why I got rid of RDSB. Not to say they're not a good company. I do like them, but I reckon if they go down to £9 again, I'd probably buy them again. But for now, you know, it is at £12.83, and I figured, you know what, let's close it. And then the next one that I've sold is NatWest Group. I'm a little bit annoyed with NatWest Group, to be honest, because I saw, oh no, not National Grid, NatWest. So with NatWest, I'm a little bit annoyed with this because I sold them at £1.55, and this always happens. I'm not even joking. When I sell a stock, it then shoots up. I'm not even joking. Like literally, I sold it at £1.55. I was like, you know what, I'm going to buy some Tesco. The next day, it goes up to £1.70, and I'm like, well, cheers, mate. So I actually sold this at a loss as well. So I sold Shell at a loss at £6, and I sold this at a loss at £6 as well, roughly about £6. And, you know, if I sold it at £1.70, I would have been in profit, but, you know, that's the game. So, yeah, so NatWest is gone. We've closed that position out. Do I like NatWest? I actually do really like NatWest, but I figured, considering that my positions are starting to get quite larger, and I figured that 120 shares isn't really much to make any sort of substantial income, I figured, you know what, I'll close it for now, but if it does drop down to like 130, 140, I may buy into it again. But I really do like it. But at the same time, in terms of long-term growth, I think they're not really going to do too well, especially with a lot of banks. They're not paying their dividends, and there's no real incentive to keep them. I was considering to sell Lloyd's, but I figured, you know what, I actually want to see how Lloyd's plays out, so I'll be keeping Lloyd's. So yeah, those are the stocks that I've completely closed my positions on. Actually, there is one more that I've also closed, and this is one that I'll definitely be rebuying back into. It was just more of a cash flow. I needed to reallocate some capital. Main Street Capital, I sold them around $33.33. I sold all 47 shares, completely closed it off. And, you know, this was actually a really, really hard one to sell. You know, I had been thinking about this one all week, whether to sell it or not. And I finally bit the bullet and sold it to put into Tesco. I know I hate to sell shares, but this one was, you know, really hard to part with. But yeah, it's all part of the experience. And I figured, you know, as part of this strategy right now, I am looking to put in quite a lot of capital into Tesco to get that dividend. So yeah, I've sold 47 shares of this, but I will be rebuying this one back as soon as Tesco goes into ex-dividend mode. So, and I'm hoping to rebuy, hopefully I can buy 80 shares of Main Street Capital, but we'll see. My goal for Main Street Capital is to get a £10 a month dividend from these guys. So we'll see how that actually plays out next month. I've reduced my position in this one as well, which is Energy Transfer. You know, I hate to admit it, but I can't even spell today. Here we go. This is Saturday morning. Sorry about the seagulls. You know, I live in this coast, so, you know, can't really avoid that. But with Energy Transfer, I have sold 240 shares this week. They did go X on Friday, and, you know, I am expecting around $66 of dividends from these. Well, I say dividends, is actually technically called a distribution from these guys. So $66 is what I'm expecting for Energy Transfer, but I am expecting to buy these back next month when I do reduce my position in Tesco's after the ex-dividend, and when the Tesco dividend does come in, or the when the Energy Transfer dividend comes in, I will be rebuying those shares, and hopefully I can get to 500 shares in this stock. I also received a dividend, and you'll never guess who I got the dividend from. And yes, it is Telefonica. I am absolutely thrilled. I have received, let's move this up here. I've received a dividend of 21 cents. This is euros. In euros, 21 cents on 50 shares, which kind of added up to £9.07. So yeah, that has, you know, I've been waiting for this a long time, and it has finally been paid. And it's actually a decent amount as well. So 21 cents on 50 shares, which is £9.07, which is, you know, pretty good. I have put that into Tesco, by the way, just so you know. So yeah, that's it for this video. If you're interested in signing up to Trading 212, Freetrade or Stake. Links are in the description, and you'll get a free share when you sign up to those when you make the minimum deposit, but yeah, that really does help out. If you're interested in trying out eToro as well, I would love to know if you guys want a review on eToro. Let me know in the comments down below. That's something that I can do. I also have a review scheduled to go up on the blog at the start of next month. So if you are interested in an eToro review, a link it'll be on the blog, so keep an eye out on that. But yeah, that's it for this video. I hope you enjoyed it. Let me know in the comments down below what you think. Will you be investing in Tesco for that special dividend, and what are your thoughts on that long term? I'd love to know all those. Leave a comment down below, and don't forget to subscribe to this channel. It really does help. I do want to grow this channel a lot. Let me know what kind of videos you would like to see on this channel. But yeah, that's it for this video. See you in the next one.